Okay, how's it going, everybody? Welcome to a capital hungry breakdown on GBPAUD. So it's been a while since we have done a breakdown on this pair. So we're gonna fully break down everything from the higher time frames to the intraday time frames, what's really impacting each currency in this quote, and any potential trade ideas we can see for potential swings, intraday plays, and we'll map out key levels and just do a full dissection of this pair. I think we'll do GBP USD after this as well. But um, also, what I want to review about this pair is before we even jump into it, is compared to other pairs I prefer to trade that you guys may have noticed, it's usually like a risk currency versus a safe haven pair, or sorry, a safe haven currency or a safe haven currency versus a risk currency. You know what I mean? Like it's usually like a euro versus a US dollar, euro versus a JPY, or you have like the US dollar versus CAD, whatever it may be. Okay. I prefer this personally just because sometimes a lot of the one-sided volatility can be easier to identify. For example, now that we're getting some headlines of mass fear and coronavirus potentially leading to more lockdowns, as we got those headlines through New York about California going back on lockdown, you can see how it changes the overall flow of smart money. And then, of course, safe haven currencies like the dollar, Japanese yen, the Swiss franc, they start to gain strength and risk currencies fall against them. And you can play this one sided volatility. When you have a risk currency versus a risk currency, or you're dealing with like a safe haven currency even versus safe haven currency, like for example, the US dollar versus the yen, which can sometimes be very hard to call plays long term because you have this tug of war fundamentally, or for example, US dollar versus the Swiss franc. You guys get the idea. So I'm just gonna go down whenever I am dealing with a risk currency versus a risk currency. I personally start to dissect or start to look at it from the higher time frames and from a macro perspective of if I was an investor and like I want to be in down the road, obviously with billions of dollars of capital, and I want to play with the markets long term or from an intraday perspective, what would I be looking at personally that would show me more strength or weakness of GBP, or more strength or weakness fundamentally of AUD for whatever X period of time, whether it's for a trade for a week, a trade for a month, a trade for 3 months, a year, whatever it may be. Okay. So whenever you have like a risk currency versus a risk currency, I personally like to lay out some points. What are some geopolitical tensions impacting GBP? What is some of the GBP data? Like for example, GBP's growth is absolutely terrible, right? We've been sharing some of the figures of how the pandemic has impacted um, global markets. If you guys just come to the trade room, I think you could just search like pandemic markets. Like for example, like when we're sharing these figures of different global manufacturing, like automotive sales, retail sales, GDP, it's been a major impact that the COVID lockdowns have had on a lot of these economies, right? You have to understand as a trader, okay, what are some of these impacts? What is some of the data impacting this currency versus the other currency, or the actual economies that's leading to economic impact? You have to also understand some of the timeline of events, because AUD was also heavily impacted by the coronavirus as well, but they got hit with it before Europe and North America did, right? They were dealing with coronavirus when it was first hitting just China, and we were hearing about the headlines about how much it's impacting Chinese economy and China culture, as well as Australia, New Zealand. That's in the headlines, and then it started moving towards Europe, and then it came over to North America. And the headlines and everything, the volatility followed through that way when you saw what currencies were getting impacted, right? Previously, GBP wasn't as weak during the time when it was only like it's just common sense when coronavirus was only heavily impacting Asian markets and Asian economies and causing lockdowns over there, right? It had to come over into Europe and cause lockdowns there for have it negatively impact UK data, UK growth, and UK economics, right? So Now that we understand, you really want to look at what impacts each currency when you're dealing with like a risk currency versus a risk currency. When I'm looking at GBP, I'm noticing a lot of tension, a lot of potential sellers pressure still. Okay. UK data, in my opinion, than is a lot worse than other regions and other countries, especially for what I was showing you guys just in the trade room. But like just like stuff like this, like the amount of the jobless people that's increasing, the consumer inflation is just at record lows. For example, when you're looking at stuff like manufacturing output, like their industrial manufacturing, like it's just disgusting drops in actual macroeconomic data where this is like people's jobs and stuff. You know what I mean? When manufacturing output is this low, everything related to that, like small businesses to corporate, that relates to this manufacturing in the UK is going to get hit. Those are jobs that are going to be lost. So we have to keep that stuff in mind where you still have a lot of negative impact politically from Brexit. You still have the UK-US trade deals, which have no growth or any progression. You still have the UK-China issues. UK GDP is trash, and we just noticed that from the figures now. And what I was sharing with you guys, of course, in the trade room, like for example, this is the UK GDP, just the index. This is, of course, the years on the bottom. This is just the growth figure. You don't have to be a rocket scientist to see how this chart works. Okay. Look at this is the blip, this spike down. Like this is pretty consistent growth, solid growth, just like when the economies are recovering, everything's good, right? This little blip was caused by the '08 crash, financial crash. This massive spike down that went below '08 crash levels from even higher growth periods is from COVID, right? Way bigger size of impact volatility, and especially with everything going on nowadays. So UK data is extremely poor. They have a very mixed sentiment with from their central banks, whether they're optimistic. Like it's very mixed. They'll show a lot of negative comments, and then come say the opposite next week and say actually economic recovery is looking good. That's just political noise, day to day shit to fit whatever motive they have or whatever agenda they have, right? Because like we don't know what their agenda is. But anyways, I'm seeing a lot more negativity impacting GBP than I am seeing AUD. I am seeing a lot of negativity building for AUD just because of their close ties with China and how their economic relations are getting impacted right now. Like like AUD and China are having a bit of beef right now, right? But AUD has had more economic recovery than GBP, especially out of like the coronavirus and the lockdown and stuff like that. Like AUD's jobs recovery has been a lot better. Their manufacturing and stuff has not been as negatively impacted. So let's pull up some of this stuff. Like they had a massive spike down in employment, of course, when coronavirus came up, but we are showing better signs of recovery in AUD. The consumer inflation is not as extremely weak as what you're seeing in GBP, of course. And this is, of course, the drop that happened with coronavirus stuff, so it wasn't as heavy of an impact. GDP is, of course, still very weak, but not as heavy of a drop as, of course, the UK had. And a lot of their figures, like the manufacturing PMI figures, they're coming back to pre-COVID levels, but still heavy impact from coronavirus. I'm not saying AUD has escaped it. I'm just trying to say when you guys are looking at a risk currency versus a risk currency, we have to weigh out pros and cons of each one and fundamentally say, okay, GBP is looking stronger than AUD right now, or vice versa, right? To me, GBP is looking a lot weaker than AUD right now, and especially with some of the data we have seen. And that's just what I'm seeing from a macro fundamental sentiment perspective. So now we want to take that and say, okay, GBP is looking weaker than AUD fundamentally. How can we start zooming down the time frames and validate this? Are we seeing those confirms with structure? Are we getting respects of key levels? Like let's just see what we see, right? you can already go off the bat that if you're just looking at market structure in this piece of market structure here, you do have overall bearish structure in a low printed seller's impulsive candles, a pullback that just created a lower high, and the potential to come revisit these lows. And especially as when we're looking at price action and how this yearly candle has already grabbed liquidity, created a major top wick, and we're potentially breaking the low of the previous candles, just looking at price action, it looks like GBP AUD has a lot of potential for downside. And that makes sense as we do see the potential for GBP being a lot weaker fundamentally than AUD, right? Especially if AUD solves their social issues with China and China has major economic rebound, that's a positive impact on AUD. And the one good thing about COVID for AUD is the fact that it has helped boost the price of physical gold. Of course, we saw that gold spot's been above the 1800s. Physical gold price is even a bit higher. And this, of course, boosts Australia's exports of gold, right? It boosts the amount of profit they're making. Very similar to concept to how when crude oil is a higher price, Canada makes more money on every barrel they export at that price, right? Between the difference of their production costs, right? So very similar sense how AUD has massive gold mines and gold production. So it has a strong correlation to gold, which is a positive impact that GBP doesn't have. Okay. So I'm seeing a lot of bearish market structure. Of course, I'm just going to start mapping out key levels using some of these flat candle body conjunction points. And then we'll go down the time frames. We'll look at the quarterly chart and just see what we got going on. And this is a yearly chart. Even if we break the low, this candle body and have that seller's momentum, this move is like 800 pips just to test these previous candle body points and demand level. And honestly, when you're really looking at it projecting, this thing looks like it could melt right back down to the lows, like these historical lows post 2008, and fill this full bearish wick range, because we have no real validation for long-term upside unless we had this candle bullish and above this previous bearish engulfing candle and above this key level at 2.02 flat, showing more potential that we're going to break the previous lower high point and correct more of this downside move if we had GBP show more fundamental strength, which it hasn't in its data. It hasn't in its political, like Brexit hasn't really shown much progression with shit either. Oh yeah, so yeah, quarterly is showing us that even more clear. Very strong bearish engulfing close on that previous candle that engulfed 90 days worth of price data. If we come below this price sensitivity area here and remain below it, as we're already having this quarterly candle create its top wick and the monthly create its top wick, we've already had this order flow filled and that snapback candle. We're still very bearish in market structure. Looks like we're going to melt down to some of these low points when we're just looking at it technically, and especially with the fundamentals, as GBP is still getting hit hard and their growth is not looking good. So I'm just going to continue to map out some key levels using 3-month candle body conjunction points. Here, of course, I'll go to the monthly and just, but yeah, get the point. So obviously this is on the monthly, but some of these ranges, they're like this is on the quarterly. Some of these ranges are fairly large. Like it creates nice intraday guidelines for us to use. We'll watch how price reacted through it. Anyways. We'll just keep it as that, so this webinar doesn't get too long. Watch like what? We'll just watch how this quarter ran through it. See how on the intraday, these candles have heavy wicks, and you can get heavy consolidations. Like you see this on pairs like GBP and ZD as well. By the way, I like the reactions for these key levels, so we'll keep that as is. We'll watch that a bit better. That was actually fast. We'll watch it on the hourly instead. Just to see. But see how in the intraday, those 4-hour candles have heavy wicks on both sides, where you get these heavy consolidation periods. In my opinion, that's literally due because you have a risk currency versus a risk currency. And there's always so much potential indecision or potential changes that you can have change that, oh man, AUD is stronger than GBP now, or GBP is stronger than AUD. Or when you have a risk currency versus safe haven, or vice versa, it's more running on a one-sided sentiment, or it's more dependent on a few factors. Like for example, a lot of like the pairs like Euro USD, GBP JPY, Euro JPY, doesn't matter, AUD USD, they're really dependent on this whole lockdown sentiment, right? Where you have to look at a lot more individual factors that are impacting both GBP and AUD to determine its strength or day-to-day volatility and stuff like that. So you can get a lot of this. You can get a lot of this ranging or indecision, and I've shared this as examples on like other pairs like this as well. And I'm not saying this makes these pairs untradeable. I'm just saying it's more appealing to look for long-term intraday trades rather than play this day-to-day mess, right? In my opinion, unless you're really active while you're scalping these pairs. I just wanted to watch that again on the hourly just to see if we see some better reactions. And of course, I'll round these zones, I'll round these key levels off after as well. Because it looks like once you catch like a nice sell-off point, or you catch a nice structure shift on like these types of pairs, you can hold it for a while. Yeah, this is extremely bearish all time frames. Man, it would have been ideal if we got a retest of this key area here. I'm just gonna round off some of these levels quick, so I don't have to do it after. And let's look at the daily as well. Yeah, this is extremely bearish though. Back to visit this low is 150 pips alone. And then you break that low, it's melting. You don't want to get faked out by the support and just like this intraday break of structure, because like it does that a lot, right? These false, as long as it doesn't break the higher time, even like these types of quick impulsive moves got quickly canceled out in a week or two to even go lower. So that's what I just want to keep in mind. And I want to keep in mind that we're already correcting some of that upside move and potential to break below this key level here. I'm just going to round some of these levels off. We have a lot more GBP data this week as well, but so far the GBP data was ass. So that's good to support some more seller's pressure on the sterling. We have AUD data this week as well, but don't quote me on it just yet. I'll check that PDF in the main feed when we're looking at the lower time frames, like the intraday time frames. I'm just going to round it off there for now because I don't see too much potential to come to these upside ranges just yet. Yeah, I would even see buys. I would see safe buys on GA above. Really just above the structure point here. Maybe you could start scaling in buys above 1.823 if there's anything to bring GBP optimism. Like let's just say we have something, like let's just say Bojo starts pumping out more optimistic speeches. The UK specifically doesn't have any lockdowns and they start having some positive Brexit talks. And let's just say by chance AUD actually goes into another wave of lockdowns, and we have a break of this structure and price above 1.823, we can start riding some corrective waves up of this downside move. But overall, the bearish, like the structure is still very bearish. We did make some low points that we can potentially revisit as GBP is looking fundamentally weaker, in my opinion, so far. The previous daily did cancel out that upside move and engulf it and create that seller's wick range, what we filled so far. And if we break below 1.80300 on an intraday perspective, I see the range to just come visit these lows and just break lower in the overall structure. And especially with what we're seeing on the yearly there. The one thing we want to note is that this is a yearly candle body level, this low point that we're coming to. So we can have a solid reaction if we come visit there. But at the same time, if we break this candle body, this yearly candle body low level with a nice intraday candle, I think we're going to have a strong meltdown on GA here. Yeah, safe buys would be above 1.823. I want to get rid of that because it's messy. Because it looked like we were going to get a potential break of market structure here. That's why cleaner sells, in my opinion, would be below, again, 1.803, because we come back below this bearish market structure. And this was probably just a deeper liquidity grab for last week. As we've seen it already start to get corrected. I would only look for buys. I would only look for buys above 1.823. I'll set alerts once I clean up the alerts and we do analysis on GU as well. Only above 1.823. And then break and retest sells below 1.803 key level. First down to the previous low point, at least. We can extend it if we break these previous lows. This is not particularly a pair I have scalped ever, so I don't have any scalping suggestions on this. This is something more I'd be looking for longer term plays. Like for example, let's just say we get those confirms of GBP optimism. We get some signs of UK data rebounding, and we get more negativity with China hammering AUD. China says, you know what, we're going to cut this tie with AUD and we're going to increase this tax against them. So it brings a lot of economic negativity to AUD. Then, of course, if we get that break above this key level with that sequence of events, you have a lot of higher time frame potential to start correcting some of this downside move and shifting into bullish market structure, right? And respecting that yearly candle body low level. And that's something you can start riding if you get a good entry, even above this safe point. It's going to start riding for like 200, 300, 400 pips. Yes, it can take a while. Like, for example, this potential sell-off that was like 1,000 pips took almost, what was that? Took almost 2 months, right? But that's the type of trading style I'm trying to adapt to. And I'm not saying you have to hold for the 2 months. Like half that period got 500 to 800 pips, right? So whenever I do analysis on pairs like this or pairs that we don't necessarily scalp day to day, I am looking for more long-term plays personally. Yeah, any questions about GA? Let's just see what events we have. At a very strong decision point where we did break some of this intraday bullish structure, but not clean enough. And we did have strong rejections where buyers failed to break the previous low and create this technical double bottom, but still overall extremely bearish on most time frames. So this could well just be a liquidity grab. Price comes below 1.803. We get a nice intraday candle close, retest, and we can ride this down at least to the previous low point. GBP data is also weak. All three reports related to gross domestic product. We have some more GBP CPI figures in retail sales later in the week. Australia employment change on Wednesday, which should show more signs of economic rebound. So we'll keep that in mind on Wednesday. And UK data should continue to be poor, in my opinion. Yeah, that's like a known thing, man. That's in the market correlations webinar. I literally just said that as well. Like China tensions impact Australia, but more importantly is the Australia and China tensions right now. Just like the trade war. Remember the trade war days? If you guys traded during that. But so far, a lot of the U.S. and China tensions, it's just talk. Like it hasn't. It's not negatively impacting anything related to their trade deal just yet. They go back and forth like that a lot, like with the little verbal chit chat. If it leads to a cancellation of the phase one trade deal from late 2018, 2019, then that's even more negative economic impact and market fear, and it can negatively impact Australia as well because of what you said, close to China. But so far, it's just been like banter. You know what I mean? Like I think what's his name? Pompeo? No, Larry Kudlow. Yeah, this is what I was remembering. Kudlow at 11:40 in the morning today said U.S. like even with all this bolt, like the White House and economic advisors said Trump is not in a good mood about China. Right? You're seeing China say the same shit like with the headline you sent in banter. Like China says, "Oh man, we're not in a good mood," but they're still not breaking from that phase one trade deal. You know what I'm saying? Like it's just banter. Like this you sent was yeah whatever you sent it, but it's still tensions building, and it can lead to. It's good to note this stuff, and it can lead to that. But like they're still continuing on the trade deal. For now, it's just banter. But any more questions about the GBP AUD? This is my main bias is the sells. I would have liked it if we saw this a day earlier or 2 days. If I did this like last week and we peaked at 1.823 to take sells, but of course we did not. And I do see the potential for these ranges down. Of course, if our analysis starts to play out, we get the break below key level, start to scale sells, and move down the ranges. We'll adapt as we go. And I'll label the chart out of what you would need for safe buys, price above 1.823, AUD employment change data weak, UK CPI data stronger, Brexit optimism and market optimism, and you would get GA bought up from these low points intraday and a break above 1.823, and we can ride it up. If everything stays as is, I see price coming below, and this is my main bias so far. So I'm going to save this, send it over, label the chart, and then we'll jump into another breakdown shortly. If nobody has any questions. Okay, cool.